let's go now to, let's take a look at dollar yen. So there's a couple things here. All right, first, we have on this really long-term chart. So we had like a massive trend line. This was the break. I mean, that was nuts, right? It's really, this line goes off of 1990 and 1998. But then you extend it to the left and you can see it hit the low back in 78. Line was resistance 2015. We broke it. Look, you don't always get a retest, right? But we've come into a level, you know, we've taken out 2015 high. We have some absolutely insane, you know, sentiment readings, if you will, shorter term, like DSI, Daily Sentiment Index, has been single digits for a while. The momentum, you know, is evidenced by RSI. I'll take a look at some of those in a second, are pretty crazy. So, you know, a snapback of sorts would make sense. And again, you know, just kind of throwing this up there with like TLT, bonds, yields, all that. It's the same trade right now. So, you know, if we do get that, you know, I feel pretty good or fairly confident in calling for some sort of a top here in dollar yen. You know, and what I say some sort of top because I don't, you know, I'm not saying that like we reversed the whole move by any means. What I'm saying is that you have bonds, a great chart, great support there, right? Which is resistance and yields, right? You've got dollar yen with the crazy readings and sentiment is silly. You know, just go to, you know, Google, type in Japanese yen and see the things that come up. In fact, what's funny is started seeing calls for 130 like yesterday on some of these Bloomberg articles. We literally traded at 129.40 yesterday. So like, it just cracks me up. They start calling for 130 when you're trading 129.40. Like a month ago, we were trading like 118. You know, so like where were the 130 calls then? It's just, it's a psychological phenomenon, psychological thing where, you know, people feel comfortable, you know, with that. And there's also, I know I'm kind of like going all over the place right now, but let's actually do this. Let's actually go to, hold on, let's go to Google. There's a couple things I want to talk about. All right, hold on. First of all, okay, Japanese yen. All right, so you pull up Japanese yen, go to news. Okay, so yen, we're starting to see the, so I talked about this yesterday, starting to see tumbles, right? That kind of language, right? Starting to see dollar surges against yen, yen tumbles, you know, tumble, lots of tumbling. That kind of language is considered strong, kind of emotive, if you will, language, which is not used during a quote unquote normal kind of market environment. It tends to be used, you tend to see proliferation of those words towards the end of a move, right? It's just natural human behavior to use strong, you know, kind of strong language, if you will, when the market, you know, is at a peak, when it's this most emotional, which by definition, it means sentiment's extreme, which tends to result in the end of that move. And I'm not, you know, again, it might be short term, right? We might just be talking it might be a couple days, a couple weeks, what have you. But still, you can have a pretty big pullback after a move like this. Another one that I want to, and I love this one. This is great. So, okay, US dollar. All right, hold on. So, news, where was it? It was an opinion piece in the Wall Street Journal, and it was written by Paul Krugman. So anything he writes, you definitely want to fade. Where is it? It was up on the front page like yesterday. Irfan saying, do I have daily analysis on YouTube? No, I have daily analysis at SB Trade Desk, but these the video or this webinar will be like kind of divided up, and there'll be videos on that. Hold on here. Oh, this is annoying. Wish I could find it. Huh. Well, let's see if that's annoying. Maybe it's gone. Krugman. Okay. Here you go. So this was it. So opinion. So this was Paul Krugman. Okay. Opinion. Why the dollar dominates. Now here's the thing, right? Like, so crowds are smart. That's why markets trend. George Soros had kind of his thoughts on markets, was, you want to be a trend follower when there's a lot of people saying this move doesn't make any sense, right? You want to be contrarian when people saying this makes so much sense, right? So basically, you only want to be a contrarian once, sentiment is kind of like saying, oh, now this is why. Yeah, once everyone realizes like the reason for the move is probably over. I think this is a perfect example of that. So you have this like New York Times article by Krugman saying why the dollar dominates. That was 4 days ago. I don't think it's coincidence that's happening right where we are. And then today we're getting pretty decent reversals to the downside of the dollar. That's all I'm getting at. So I don't know. Just, kind of a art. And again, this is definitely not a scientific thing. This is that reading sentiment and all is very much an art. But yeah, just, kind of another piece of the puzzle there, suggesting that maybe the dollar is a bit high for relative to where it will be in the near future. All right, back to the charts. Apologies for completely going off script there. All right, so where were we? All right, so dollar yen. Okay. So let's go to zoom in a little bit. All right, so we have a couple things here. First, I'll bring in this chart. This is a daily chart going all the way back to 2011. And this is essentially what your big new channel would look like. And 130 is the center line, maybe a hair above 130 actually. After today's kind of action, I'm not sure if we actually get there on this run. So we'll see. But here's another channeling technique, if you will. All right, so if we draw the channel from the 2021 low, right? So I talk about this kind of channeling stuff all of the time. And you have a corrective channel. Once you break out of that channel, the top side of that channel, that former upper parallel tends to become support, in which case it was here. I guess we missed it by about 10 pips, but you get the idea. Then what I have, these parallels are extended. This is half of the channel width extended. This is a full channel width extended. Okay, the full channel width is oftentimes a very useful target. So in this case, you can see half channel width was where we had the one pullback, right? Full channel width is what we hit the last 2 days, and we're reversing. So in other words, it's never easy, or to identify, if you will, kind of the levels to work with when you're at kind of stratospheric levels like this, right? We're at like 2-decade highs. So it's not like you can just, excuse me, get the hiccups. It's not like you can just look at a chart and say, oh, there's, former support and resistance, blah, blah, blah. I mean, it's just, in this case, you really can't, because we don't really have any at these levels. But what you do have is this channeling technique of a level. So from here, I'm just trying to trade between the parallels, right? So, I actually put some on last night up here, and I'm looking down here. So like 125.40, the next parallel, which was resistance, and again, support. That's your next spot. Again, I love the analogy of kind of like a train station, if you will. market, you know, you get on the train over here, get off the train here, blah, 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 blah. You don't need to be on the train all the time. So that's where my head's at with dollar yen. Again, you know, some pretty extreme wild moves. So don't forget, we've got, if you go to Twitter, my Twitter page is at Jamie Saettele, just my name, but I've got the link on there to our prop trading program, scandinavianmarkets.com/getfunded. Again, check that out. Okay. This is going to be, you know, we've had, excuse me, we've had, you know, a lot of questions here. We've, you know, kind of revamped the program. So come check it out. You can read all about it. Essentially, you know, you can get funded with up to $2 million. You can get funded with far less, of course. There's an assessment fee. Once you pass that, you do get funded. There's no time constraints or time limits like other programs in which you have to make a certain amount of time. Trading does not work like that, right? Everyone's different. There are drawdown limits, of course, and there are targets that you do need to hit, but you don't have to hit it within a certain amount of time. Okay, if it takes you 6 months, fine. It takes you a year, fine. If it takes you a month, great, right? But there is no time limit like other programs have. So come check that out.